I think real estate is so attractive because of three things. Basically, cash flow, retail arbitrage, and appreciation.
A study of economics usually reveals the best time to buy anything was last year. You guys get it? Because, everything rises over time. Real estate, stock, portfolios, inflation. $1 yesterday is not the same as $1 today.
Yeah, so there's three ways to make money in real estate. I think real estate is so attractive because of three things. The first thing, overarching, is leverage. You can borrow anywhere. You can borrow against real estate for the cheapest cost of debt of any other asset class. And you can borrow 80% loan to value, in some places 95% loan to value with the FHA loans or the CMHC in Canada, where you can buy 5% down or even 3.5% down. You cannot buy stock 3.5% down. You can't buy shares in Apple 3.5% down. You can't buy businesses 3.5% down or 5% down or even 20% down. You almost always have to put a higher percentage down. So because you use the bank's money at a really cheap interest rate, you can get great returns out of real estate. Now there's three ways to make money in real estate, and I think you need to make all three for it to be really, really attractive. The first way to make money is cash flow. You need to be buying property that cash flows well. And when I say well, I look for little rules of thumb like the 1% rule is the basic one that I use. If a property is worth $500,000, you're buying it for $500,000, you need $5,000 a month in rent to make it worthwhile. That's one little hack people have used to determine whether it will cash flow. 1% rule properties, residential properties, they cash flow. So 1% rule is a great place to start for cash flow. I look for 25% return on my money just from cash flow. The second I look for is retail arbitrage. Retail arbitrage is the idea that you can buy real estate for under retail price. You can arbitrage the price. It's retail arbitrage. So you buy property and then you add value to it. You buy it for less than it's worth in the open market. So you buy it for 70 cents on the dollar. You buy a $200,000 house for $150,000. Very common, do it all the time. Like just recently I bought a $240,000 house for $160,000. So you buy these properties, you fix them up, you value add, you put in renovations, you change the layout in some way to add value, and then you rent it out and you pay cash flow, you can refinance the property. The sweet thing about retail arbitrage is if you bring 20% down and you're making 20% margin on the property, you're almost always doubling your down payment. So you can get 100% return on your money in year one, just from retail arbitrage. A lot of people use that strategy alone. I like the 1-2 punch. Cash flow first, retail arbitrage second, and then the third thing is like a kick to the face, which is sort of a bonus, right? And remember, your retail arbitrage is 5-to-1 because you're buying 20% down. When you buy 20% down and the bank puts up 80% of it, every dollar you put into real estate buys you $5 in real estate. So your down payment, right, buys you $5 in real estate. So $100,000 in stocks buys you $100,000 in stock. You can use margin trading to maybe put $100,000 up and buy $200,000 in stock, right? I used to be a trader, so I used to do all of that as well. I actually day traded 3-to-1. I had to borrow at 8%, 7.5%, 6.5%, 8%. You're paying a really high interest rate. So your cost of debt is eating into your profit. With real estate, you can borrow way more, 5-to-1. And you're borrowing at 3% cost of debt. So it's eating in way less of your profit. That's huge, guys, at the end of the day. It's just so powerful. That's why I love real estate so much. And I'll give you the final kick now to the head. So the final kick is appreciation. Basically, cash flow, retail arbitrage, and appreciation. If the market appreciates at 3.5% a year, which is what it's been doing, 3.5 to 5% for the last forever, that's just how real estate's moved. Some years down, some years up, but averaging that amount. You watch my video on how asset classes performed over the last 20 years, real estate actually did perform as one of the top asset classes, and that's just including appreciation. That was not talking about rental income. A lot of people buy just for appreciation plays, right? So you've got your cash flow, which you should look for 25% return on your money. And there are no dividends out there for any reasonably equally risky stocks or companies out there that pay 25% dividend a year for the level of risk you're getting with real estate. If you're buying real estate in a developed nation like Canada, the United States, Europe, a lot of places where it's safe to buy real estate, if you're buying real estate like I am in Canada and I'm able to get 25% return on my investment just from cash flow, plus I double my down payment, so I get 125% return my first year. So if I get retail arbitrage and let's say my real estate asset goes up 10% in value, I'm 5-to-1 levered. So 10% on the whole asset gives me a 40 or 50% return on my down payment. 20% return levered 5-to-1 gives me 100% return on my down payment. Let's look at an example. You have a $200,000 house. You buy it for $200,000. It becomes worth $300,000, right? Because of retail arbitrage, you bought it for a deal from off market or whatever. You had to add some value, change the tenants out, whatever you had to do, evict the tenants. Maybe you had to renovate it. There's a whole bunch of things you might have had to do to get that value unlocked. Maybe you had to do nothing. I bought one property. We bought a property for $200,000 privately from someone. We did nothing to it. It reappraised at $320,000. The mortgage on it is now going to be 80% of the new value. So we did nothing to it. On closing, we're putting a mortgage on it for $256,000. So $56,000 more than the purchase price. We are negative $56,000 in. The ROI on negative $56,000 is infinite. The infinite sign. Your ROI is unlimited. You're getting $1,000 a month cash flow and $56,000 at the start, plus you have equity still in the property. That's the power of real estate. You can't do that in the stock market because you can't leverage in the same way. The reason it's safer is because you're buying basically blue chip. Like I look at real estate as like a safe blue chip. And if it cash flows, you don't care about the price anyway. So if real estate's moving up at 3% a year and you have 20% down in the property, that 3% of appreciation gives you 15% return on your down payment. Because remember, 3% on $200,000 is what? $6,000. What's your down payment? Your down payment on $200,000 is $40,000. So when it appreciates 3%, you make $6,000 on your $40,000 down payment. That's a great return on your money, right? Yeah, that's the beauty. Real estate is so attractive because leverage. If you're buying properties 100% in cash, or basically no leverage at all, the return on your investment should be like 7, 8, 9, 10%. Same as stocks. Like they're almost the same. There is no advantage beyond the tax write-offs that you get with real estate. That's the spiel about why real estate is so attractive and why I can't get my hands out of it because it's just so hard. Like deals keep falling in my lap. We just had a deal fall in my lap. There's a house listed down the street for $500,000, $499,000, and a private deal they're being foreclosed on, and they just needed cash to get out, and they don't want the lender to foreclose on their house. $305,000 plus the wholesale fee. $305,000. We were playing good cop. This is before I became a realtor, but we were playing good cop, bad cop, and we basically, me and wholesale beat them up and got it down to $305,000. And they were happy. They walked away. They still had some money in their pocket. But $305,000. We have to renovate this property and fix it up. But when those keep falling in my lap, where I can it's an opportunity to just triple my down payment. Like when someone comes to you and says, hey, I have a 200% return on investment opportunity. If the market remains flat, if nothing happens out of your control, you make 200% return on investment. There is no stock like that. You have to bet on management to perform. You got to take gambles and risks. With penny stocks, you're taking risk. With dollar stocks, you're taking risk. You're speculating. I don't buy property and say, hey, London's going to appreciate 10%. I'm going to make a bunch of money. That's not why I ever buy property. People buy stock because they think, hey, this stock is going to go up in value because of X or Y reason. They're gambling. I'm talking about sure things. I can't screw it up. Even if I screw everything up, I still make money. I just don't know how you lose money in real estate. I don't know. The kind of deals I'm buying, it's impossible to lose money. And so when the bar is set at never lose money ever, impossible, and stock investing, I can lose money so easily, it's a no-brainer for me. And I used to be a day trader. Like I still have a stock portfolio, I still trade just to have the diversity aspect, but man, real estate is so attractive. And being from the FIRE movement, I'm all about just mastering the equation to building wealth, right? Like I just want to spend as little as I can, earn as much as I can, and then maximize the return on my investment. Real estate provides the best way to do that for the lowest amount of risk. I don't like taking a lot of risk. And buying stock where I'm not in control of management, I'm not in control of any operations, I just have to guess. Now I can do an educated guess, but I'm guessing. If I'm technical trading, right, I'm trying to trade on trend analysis, that's all, people try to create algorithms that can beat the market. I'll tell you what, those all break. Every one of those patterns, those trend analysis, historical analysis, trading platform algorithms you hear about, they all break. You know why? Because people trade on psychological bias. They trade on emotion. It is impossible to predict market sentiment going into the future in real estate and stocks, in anything. But you can do it. For instance, if you could insider trade in the stock market and that was legal, if someone could call me and say, hey, Mike, I get your Apple shares at 70 cents on the dollar. What do you think? I'm like, yeah, man, let's do it. Let's go get a mortgage and we'll buy every dollar I put up gets me $5 in Apple shares and I'll sell them back in the open market tomorrow because I don't care what happens to the price. I know tomorrow I can sell it for X. I'd be all over that. That is what I'm doing in real estate. I can't do that in the stock market. And so if you can develop the skills that I have, which there are thousands of people out there who develop the same skills I have, making tons of money in real estate, if you can develop that small edge, then you make a ton of money in real estate because of leverage. That same edge in the stock market without leverage isn't as powerful. That's what it is. Most of the guys that trade stock, most of them either acquire a ton of capital because they're making small margins better than the market. They're beating the market by 1 or 2%. And so they need millions and millions. They need to have big hedge funds to make any money on the amount they are better than the market. But the guys who don't have a lot of money, like the guys you just see those YouTube channels who are just buying and selling stock, they've been in the best bull market in history, for one. Just wait. Watch them over a 25-year period, not a 5-year period. But watch that right over a long period of time. And watch how they don't beat the market for a long period of time. Most of those guys make money from YouTube, make money from selling you courses. I'm selling you nothing. I'm completely unbiased. I have a stock portfolio and a real estate portfolio. What I can tell you is if the real estate market crashes tomorrow and the stock market crashes tomorrow, I'm screwed on my stock market. I have stop losses set, so my stock will sell, but I'll mitigate my losses. But I stand to lose in the stock market portfolio. My real estate portfolio is just fine because I'm making cash flow $1,000 to $2,000 a month per property. I don't care if the price fell 50%. Rents, go look at rents over time. You know what the chart looks like? This. There has never been a down year for rent. Ever. Ever in my market. Never. We've had 2% increases, 1% increases, 5%. Market's jumping. Rent remains stable. In recessions, people need a place to live. The only way rents go way down is if there's a huge vacancy and then landlords drop them because they can't rent them. But good marketers, good managers who know how to market their properties well, good pictures, good photography, they still rent their properties out, even at 10% vacancy rate, because they have a good product people want, a good place people want to live. Thank you all for watching. As always, the secret to unlocking wealth for you is to spend less, earn more, and maximize those returns. And I please ask you one favor is that when videos drop Saturday, hit the like button right away and let the video watch all the way through. That would mean a lot, and drop a comment. Bye. I'll see you next Wednesday.